So hi guys, welcome to our first webinar of the month to discuss Profit First, and really pleased to announce that we've got Billie and Grigg from the States joining us as well, and hopefully she will be answering some of my really difficult questions towards the end of the presentation. Hi Billie.
Hi Lee.
Are you
Thanks
right?
for having me.
Yeah, that's fine. What time is it over there?
It's 5 a.m.
Oh, amazing. Your normal time of getting up in the morning then?
Yeah, about now is when I start waking up.
Great. So I think we've got a couple of people just sort of joining the webinar. So just a bit of housekeeping to start with. If you've got any questions, put them in the Q&A section of the webinar, and then we're going to try to deal with these at the end. We should have 5 or 10 minutes if anyone's got any specific questions. The idea with Billie is that I'm going to sort of fire some questions at the end, and hopefully that should cover any issues that people might have following my presentation. So for the next 15 or 20 minutes, I'm going to go through the presentation, talk about Profit First and what we've done with our clients and how we've implemented it in our practice as well. So before we do that, all right, so we've got a little bit of an issue with, there we go, sorry. So about Refuges. Refuges, we're an award-winning accountancy firm specializing in strategic business planning and commercial solutions for our clients. Our purpose is to truly impact the lives of our people and our clients. Profit First really does that. It does truly impact the lives of our clients, because when they start implementing some of the theories, it really does make a huge difference to their cash flows and their profitability. We do this by helping them find personal freedom by providing a holistic approach, ensuring that they see maximum results at all stages of their business cycle. And there's a few of the sort of industries that we specialize in as well. We think big. So as you can see, we offer a holistic approach to our clients, helping them with their financial advice and providing solutions along the way. So there's some of the services that we provide: strategy, strategic advice, advisory, added value, making sure these guys are growing their business and achieving their personal business goals. Profit First is now a massive part of our advisory service that we provide. Wealth management, also if people want to retain the wealth that they've built up, we provide advice to make sure they get the best returns on their money and making sure everything is secure for their retirement. Corporate finance is now a massive part of what we do, looking at providing funding to our clients via a really good brokerage system that we've got, and looking at any mergers and acquisitions as well as the funding part. Tax planning, so we have a really great tool to help make sure that we're providing efficient tax services to our clients. And then we're looking at forecasting, management accounts, and also the routine compliance work that you'd expect a firm of our size to provide. So about myself, 30 odd years experience in advisory. I think there's only a few in the UK Profit First certified. So we became certified about 6 months ago, after sort of reading the book about 20 times and putting off actually doing the exams, but we're now certified. So now we can actually go ahead and give this advice to clients, which we're beginning to do and seeing some great results, and obviously supporting businesses to achieve their 5 to 10 year goals. Billie Ann, so she's obviously a lot longer than me as a professional since 2014, and has over 20 years of bookkeeping experience helping small and medium-sized businesses. And she's the go-to person at Profit First in the States, and she does loads of webinars herself and really helps with the Facebook group where businesses have issues, and she deals with them. So welcome, Billie. So hopefully in this webinar, you'll learn how to maximize your profits, identify areas of your business where expenses can be improved, resulting in obviously more profits, implement a proven system, ensure that you're measuring and getting profits as expected, and free up your valuable time so you can do lots more marketing and operations stuff. So Profit First. So what's the problem? So the main problem with most businesses is that they use the gap principle that we've always work to and adhere to, and that's sales minus expenses equals your profit. The problem with this is that this doesn't help in reality for small businesses. So what it does, it just focuses on the numbers. It doesn't take into account the human behavior that we all have when we're running a business on a day-to-day basis. Also, it's very hard to get to know your P&L and your balance sheet on a real-time basis. So what people tend to do is they tend to run their business through their bank account. And we'll talk about how we can make sure that you're using your bank account to actually run your business. And that's what Profit First does. It looks at your bank and makes sure that you're allocating money into those necessary bank accounts. And all of this was sort of brought about by Parkinson's Law. So Parkinson's Law definition really is that our demand upon a resource tends to expand to match the supply of that resource. So what that means in real time is that it's like having a tube of toothpaste, that when you first buy that toothpaste, you're quite generous with the helpings that you put on your toothbrush. And it's only towards the end that you really start squeezing that toothpaste all the time. And it's the same with your business. With Parkinson's Law, that if you've got money in your bank account, you're more likely to spend it. Again, with business, if you give somebody a budget, I don't know, of £10,000 to spend on refurb, they will spend up to £10,000. They won't look to be as efficient as possible. They've got their budget and they'll spend up to their budget. And the same principle works here, is that if you look at your bank account on a regular basis, you will spend what's in your bank account without realizing that there's costs coming up in the future. You've got the VAT to pay, you've got the tax to pay, and it just doesn't help run your business efficiently. So what we try to do is, the way to sort of look at this is that you then take your profit first. So as the name suggests, you have your sales, and then the idea is that your profit will come after your sales, leaving your expenses as a remaining balance. The idea is that the expenses that are left, you work with what's in that bank account. So you're actually becoming a highly effective method of managing your finances by having your bank balance accounting. So the idea is that like when you're looking at your profit, you take that before your expenses, and then you've got to run the business on what's left. So the way you do that is having sort of small plates. So you look at your small plates as your bank accounts. So the idea is that your serving tray is all your income coming into your main bank account, as it does now. But the idea is then you start allocating money to 4 separate bank accounts. So the idea is you open up a profit bank account, an owner's pay account, a tax account, an operating expenses account. And the idea is you allocate pre-allocated apportionments to these accounts. And the idea is you take the profit first, and then your owner's pay, then the tax, and then the operating expenses. Very simple method. You might be thinking, how do we actually agree those pre-allocated apportionments? So the way we do that is that Profit First in the book suggests these as a starting point to look at the percentages that you should be allocating. And as you can see, real revenue is defined as revenue after your cost of sales and your subcontractors. So what you've got to look at is your gross profit figure. It's not your turnover, because your turnover you could be turning over £5 million, but your margins are so small that you're only left with a small percentage, maybe 10%, and that's the amount that you can use to pay all your other to allocate money into your other bank accounts. So we look at real revenue, and we use that as your 100% marker. And then you look, as you can see here, that if you're in column B, that your 250 to 500 real revenue turnover, these are sort of the suggested percentages, and these are only suggested. So this is just a good starting point, and obviously every business will have their own percentages, which we'll talk about later. So that's how you then look at allocating your percentages. And the way we look at then the initial setup. So this slide is a little bit confusing, and I'll go through in a bit detail, but it's quite simple, to be honest. That we've talked about setting up your bank account. So you have your main current accounts at your existing bank, and there's your 5 bank accounts. And you go to the bank, you open them up, and you make sure that they have what most people do is they will actually name those bank accounts as the names here. So it will be called the profit bank account, the taxes bank account, etc. Now, what most people do, and we suggest, and this is really important, is to actually create your savings accounts. And these should be at a different bank account, not ones that you generally bank. And it should be at a bank account where it's really hard for you to access the money. The idea is to remove temptation away from your current accounts. So you would have a profit and taxes account in a separate bank account. And sometimes I've got people actually do internet banking and actually give somebody else the login details. So they just can't get hold of that money until the taxes is due and the profit is payable. And then you look at determine your caps and determine your taps. Now, your caps is your current allocation percentages. So what we do is we actually go through and work out through an initial assessment of what your existing percentages are to your real revenue. So for this example, the profit is 1% of real revenue, 20% of taxes, and 50 and 29%, and so on. And then the idea is to look at your target. So what would our target be? What should our target be per the graph previously? So we should be hitting a target allocation of profit of 10%. So we've got to move 9% from our current percentages to our target, which means we've got to nick 9% from somewhere else. So the 9% from somewhere else has to either come from the owner's compensation or from the operating expenses account. So as you can see, we have increased the owner's comp by 5% as our target, and we've really slashed our operating expenses back down to 15%. And they're our long-term targets. They're not our targets for the next month. And we'll discuss how we should be going about making small incremental increases to achieve these targets. So that's how we go about it. And there's a whole session and working out what your current allocation percentages are. And we do a really nice report to show what our target percentages are as well. Then we've talked about removing temptation. So removing temptation is making sure, and this is really important, is that I get asked quite a few times as well, whether we can just have all this in one bank account. And people will say that they'll be regimented and move and allocate and pay the payments from the one bank account. And that's just not worth doing it, because you have to take them out into those separate bank accounts just to remove their temptation. And even having that second bank account somewhere else will help hugely when you come to look at your bank accounts and allocate things. So here we go. You got allocate. The order is everything. So we know that the deposits coming into the income account, the profits going out first, owners pay tax, operating expenses. Now the operating expenses is really important, because what you now need to do is, there's no point looking at your income bank account. Looking at your income bank account is no point. It's misleading. When you're looking at your bank accounts on a daily basis, you've got to look in your operating expenses bank account, your OPEX account, because that's where all your expenses are going to be paid from. And it's really interesting that you've got to look in there on a daily basis and say, right, can I afford to spend so and so on maybe flights today? If there's no money in the operating expenses account, you can't. So you've got to then work your business based on the funds that are in that account. Does it make good business sense that we can spend the money on the from the operating expenses account, or do we wait another week till we know that the money's in there when we do our allocations? So you make business decisions looking at your operating expenses account, not your income account. Really important. Some people forget to do that, and you end up back to square one. So the next part of the process is that you've got to make sure that you're we call it the 10-25 rule. So this is where you get into a rhythm that every 10th and the 25th of the month, you actually sit down and for half an hour on those days and allocate money from your income account to these other accounts that you've created. So this is a nice example that for the last 2 weeks, you've got £5,000 that's come into your income account based on our percentages that we've agreed upon. That 50 quid goes into the profit account, 1,000 into the tax, 2.5 to the owner's comp account, And the owner's comp account is obviously paying yourself, is your salary and your dividends, and the operating expenses account is 1450. And as you can see, we've then gone, the idea why we've got the savings accounts is that what you want to do is, because you can transfer money instantly between accounts at the same bank, the idea is that you do that into your profit in your tax account, and then you put it into a savings account. But that takes 2 or 3 days to get into that other account, which is why we have those savings accounts. So it is a bit of duplication, but it just makes life a lot easier. And obviously your owner's comp goes to your personal bank account because that's your salaries. And as you can see, the OPEX account pays all the bills, the payroll, the credit cards, the travel, etc., etc. So that's how we would see the payments and the allocations being applied. Some people prefer to do it on every Friday, every other Friday for 2 weeks. The 1025 is just a guide, but it's just to show you that every 2 weeks you should be setting up a system that you know that you've got to comply with and make sure that it gets done. So the fix then to make sure that the company is profitable and you're taking the profit first is following these sort of 3 phases. So the 3 phases, the first phase is that we actually do the profit assessment. We look at your historical review. We look at your 2 or 3 years previous accounts, try to get those current allocation percentages nailed down and agreed upon. The next thing is then set up your allocation bank accounts. So that could take a bit of time making sure those bank accounts are set up, and then obviously look at your target allocations and decide what percentages we should be putting away. And the important thing is that we've got to do it. Really important is that we do these in small incremental increases. What we don't want to do is do a huge big increase to say the profit account for the next month, find that we haven't got the funds to do that, and then we have to repay it back. I would rather you do 1% increase for that month. You get a good feeling of how it's working. You've got a good feeling that you see money in that profit account, and then the next month you maybe increase it to 2%. So it's really important that we do really small increases. And then phase 3, we look at how we can maximize the profit. We have a quarterly review. We look at what's in the profit account. We look at the percentages. We make sure that the percentages are in line with what our targets were. We look if we need to tweak anything, and really keeping an eye on the business every quarter, as well as maybe looking every couple of weeks or every month, just having someone to talk to. So this is the quarterly routine. So the quarterly routine is virtually the same slide, but the big difference is that you will have money in your profit account. So over the 3 months, you should have a few quid in your profit savings account. The idea at this stage is that you will take 50% of what's in there and pay yourself. So the idea is you pay yourself a small bonus every quarter of 50% of that account. Also at the quarterly stage, you would pay your quarterly taxes, the VAT that needs to be paid, and any other taxes that you might have. And then obviously you review your targets and make any changes. So the idea is that if you're transferring 50% of your profit, you're going to be leaving 50% in your profit savings account. The idea is that this builds up. So the idea is that eventually you would aim to have sort of 3 months worth of cash in that account as a rainy day account. So if, God forbid, the sales dropped drastically or you had a big expense that you weren't aware of, you now have the funds in there to cover those eventualities, which is really good. And it just makes you feel nice that you've got a bit of a buffer if there's any issues going forwards with sales. So that's the quarterly routine. And what we found is that this is really, really important. That is fine. And I've got clients who have tried to do this on their own, and they've come back in a couple of months' time when I've sort of followed it up, and they've gone, oh, it's been a disaster. I just haven't had the time, haven't had the reason to actually do this, and other things get in the way. So what we try to do is, look, we'll make you accountable. We'll Skype call you. We'll meet up. Whatever you want us to do, we'll then every 2 weeks just make sure you're doing those allocations. And it's worked really well. That another client I work with, every 2 weeks, he knows that I've got a Skype call 8 o'clock in the morning, and he knows that he has to do those allocations, and it makes him accountable, and it makes him do this. The Facebook group I think Profit First, Billie might be able to talk about this later. I think that, I don't know how many they've got within the group, but a lot of people get a huge amount of benefit chatting to other businesses in the same boat, other professionals, and the learning from your peers is really important when you're trying to implement something like this. So Profit First. So where do we hear about Profit First, and why are we experts in this methodology? So Profit First, this was a book written by Mike Michalowicz. I think I've said that right. Normally struggle with his surname, but he was a business owner himself. I think he built up and sold a couple of multi-million businesses, really successful at the beginning, and then I think he started then investing in other businesses, and very quickly became a little bit of a problem, and realized that small businesses needed a bit of help with their cash flow and with their finances. And then he decided to write this book, and it's become world known and has been mentioned in a lot of documentaries and business articles. And he was the one who sort of implemented this bank balance accounting system. So I would highly recommend getting the book. And it's been revised and expanded recently. So if you do anything after this webinar, just without a doubt, go on Amazon, buy the book, and read about his history and the way he learned how Profit First changed his business and his life. So what are our next steps? So our next steps. So after this webinar, you've got sort of 4 choices really. You can do nothing, say, oh, that was a nice webinar. I spent half an hour listening to Lee, dulcet voice, and maybe we'll go back to work and nothing happens. Or you can retreat. So you can sort of do a little bit, go back into the business, try to open up the bank accounts. Maybe it's a pain in the ass trying to open those accounts, and you end up, oh, I've gone too busy. I'll leave it for another day, which is not ideal. Or you maybe take a little bit of action. So maybe you open those bank accounts, but nothing really happens because you haven't really set yourself those targets, the 10th and the 25th, to do the allocations. No point opening those bank accounts without doing those allocations. Or you can take massive action now. So what you can do, you can contact me, and we can have an hour's meeting, talk a little bit in detail about your business, and take really big action if this is something that you believe will make a difference to your business. You can attend our free 7 ways to grow your business seminar that we've got in London towards the end of November, which we will be talking about Profit First in a bit more detail. And obviously I can do your Profit First assessment and work out your allocations, and maybe just talk through the theory with you in a little bit more detail. So a little bit more about the 7 ways to grow your business seminar that we've got towards the end of the month. So if you like to attend, there'll be some emails and flyers going around shortly. Just contact us and we'll reserve a space for you. So what I'd like to do now is bring Billie in, because it's really easy doing a presentation like this, but you're sort of on the ground floor, sort of helping clients on a daily basis with Profit First. It'd be really good just to get some of your sort of ideas and how businesses can implement Profit First. So I think the first question I've got for you is, what's the best way that small businesses can get started with Profit First?
Well, Lee, definitely working with a Profit First professional like your firm will help immensely. I think you nailed it, that trying to go it on your own can lead to disaster, or at the very least frustration. But starting small is another very important thing. You might look at these numbers and think, oh, 5 or 10% to profit, that's not that much. And even if historically your business has been profitable, if you try to take that 5 or 10% right from the very beginning, it's going to strain your cash flow and you'll get frustrated. So taking those really small steps, 1 to 2% into each category, is the best way to get started.
Okay, that's great. And how have you seen Profit First help businesses maximize their profits? So you've obviously taken them on just a normal business, but how have you helped them maximize the profits for them?
So I think my biggest success story, I have two of them. In both cases, they were both partnerships. They were kind of in a eat what you kill scenario. The partners would bring in business and then they would each just take out whatever they brought in. And the business was not growing as a result. And sometimes they didn't bring in a lot in sales. And so they were suffering personally. Putting them on the profit first system gave us the ability to give them a more stabilized salary for themselves. One of them went from their idea of having a nest egg was having next month's rent set aside in the bank account, so $3,000. By the time we were done with their implementation, they consistently had $20,000 across all their bank accounts, plus they were paying themselves regularly and consistently.
That's amazing, yeah. And have you seen improvements in all the businesses that you've dealt with who have applied Profit First?
Yeah, Profit First works for everyone. Some results aren't as dramatic as others. Some businesses are doing okay. Some will have other challenges that they have to overcome as well. So it's a holistic system. We look at expenses, but we also look at pricing and margins too. So it is beneficial for all businesses.
And also the size of businesses. So I get asked quite a lot that this really only applies to really small businesses, but I don't think it does. What's the sort of the largest business you've dealt with?
No, that's not true. It will work for multi-million-dollar businesses as well. I think the largest business, I haven't personally done this one, but someone else on our team has done one that was $10 million. And they implemented Profit First, a multi-divisional $10 million company, really turned it around. They were able to assess their business and determine that one of the divisions wasn't profitable, make some changes there, and just turn the whole business around.
Okay. And also, one of the questions, again, I get asked quite a lot is that, fine, you do all the percentage allocations and you sort of really cut the operating expenses. But then I get told that I can't cut my operating expenses any more than I can. What would you suggest to help those businesses where they've said, well, I've cut everything I can, but you're telling me I've got to cut another 10%. How would you then approach that?
There are a couple of ways. Number one, work with someone to go through your operating expenses and really challenge each one, because we can tell ourselves, oh, this is an essential expense, and maybe it's really not, or maybe there's an alternative out there. But another thing too is don't only look at expenses, because if you can increase your sales or your margins and not increase your expenses in tandem, which is what most of us tend to do, and Profit First helps us not do that, then you can get closer to that target operating expense allocation without actually having to cut anything else out of your expenses. So it's a multi-pronged approach.
Okay, that's really good. And what about debt? So again, this is quite relevant, and I think there's quite a big portion in the book about cutting your debt using the Profit First system. So how would you recommend clients where they've got, I know, bank debt, they've got loans and other debts that are in the business? How would you help really cut that debt using the system?
Right. So what we want to do is, number one, we want to make sure our operating expenses are low. We also want to make sure we're maximizing our margins. And then at that point, anything extra that we have, we need to put to the smallest debt first. So Dave Ramsey, who's really big over here in the States, has what he calls the debt snowball, which is where we want to really knock out that smallest debt first, pay the minimums on everything, put anything extra to the smallest debt. Once that debt is paid off, take everything you were paying to that debt and apply it to the next debt. And then in that way, you snowball your debt. That's phase one. Phase two is when you take your profit distribution at the end of each quarter. So you're going to take 50% of what's in your profit account as a distribution to yourself. Use 95 to 99% of that to put an extra payment towards that smallest debt. That's kind of like the 1-2 debt punch. We're trying to just knock it out as quickly as possible, but we also want you to still have that reward from the profit account, the 1 to 5%, to reward yourself and celebrate for having a profitable business.
That's really good. And also, I just want to sort of share what I've been doing with the client in his business, and he had already set up his bank accounts a few months ago, but was really struggling to sort of implement it. And then he came across us as a professional advisor, and it was funny. As soon as we did our profit assessment, report where we decided that we wanted what the target allocations were. And it's funny how as soon as we've done the target allocations, we've changed it 2 or 3 times since then. And I think that just shows you that really this is a whole mindset change rather than actually looking at the figures and sort of working to those figures. And I think that's what I've been trying to get across to him, is that, look, there's no problem changing it next month if we can't hit our allocations. But the idea is to make sure that we go forward in small incremental increases all the time. And the first session we had, he did turn around and says, look, I can't cut my operating expenses anymore. And I said, look, just go through the exercise. And he did. And within a week, he'd already cut £10,000 a year out of those operating expenses. And then we was talking about other ways to increase the income coming to his account. And he said, oh, well, I haven't increased my prices for at least 2 or 3 years. And I said, look, have a go, increase your prices, see what the effect is. And he said he did. And then when I caught up with him a couple of weeks ago, he put up his prices 10% and didn't have any knockback at all. And straight away, that's put on 20 grand's worth of income on his bottom line. So it's amazing just having those chats with somebody, and somebody sort of from outside looking at the business made such a big difference. And do you find that with the guys that you work through? It's just being accountable to someone makes a huge difference?
Absolutely. Accountability is huge. And also getting that outside perspective as well, because we're too close to our business numbers. So having someone else come and say, okay, well, let's just take a look, let's see what we can do. And then I'll check back with you to see how you've done in a certain amount of time. So that accountability is massive.
Okay, that's really cool. So I've got a question that's come through from Louisa Henry. Thank you, Louisa. She's asked, how often do you recommend reassessing your allocations, monthly or quarterly?
So when we first get started, monthly is the best way to go, because you're going to be testing the waters and seeing how things are going. Once you're established, though, you want to look at it quarterly.
Okay, yeah, that's what I was thinking as well. And also the allocations, I think some people I have seen do it weekly as well as bi-weekly, just to get into the habit. Again, that's not a problem, is it?
No, weekly is actually most of my clients, when we start with a Profit First implementation, we just pick a money day. I say pick a day that's not Monday or Friday, because you won't do it on those 2 days, but pick a day and then do your allocations weekly. With time, as the rhythm gets more established and you get more comfortable with your cash flow, then you can spread it out to every other week or the 10th and 25th.
Yeah, cool. And can you just, if people want sort of more information on Profit First, what's the best place they can go to? Obviously, they can buy the book, but is there anything online, or is there any Facebook groups that they can belong to?
Yeah, we are on Facebook, so Profit First Professionals on Facebook. We're also on LinkedIn. And then if you just Google Profit First, you will find all sorts of videos and articles that are done by our offices, and then also by Profit First professionals across around the globe, actually. Okay,
that's really good. Have you got anything to add to the presentation, or something that I've missed, or that you feel that would be really good to the people listening?
Well, I think you did an excellent job with this presentation, Lee. The one thing that I would add is don't wait. Even if you're not sure if this is something that can work for you, I mean, I can tell you, Lee can tell you, this is something that will definitely work for your business. Don't wait, just go ahead and get started. Otherwise, you'll drag along for 3 months or 6 months or a year, and then just think, wow, I could have already been there. I could have already started being profitable.
Yeah, that's great. That's a great bit of advice. So thank you for people for listening. There's some of my details if you need to contact me after this presentation. Much appreciated, Billie. Thank you once again. You can go back to bed now.
Thanks, Lee.
And hopefully catch up with everybody soon. Any questions, let me know. And hopefully I'll see you at the 7 Ways to Grow Your Business the end of November. Thank you.